Happy Thursday, happy trading. Nothing I'd rather be doing on this Thursday than trading. I tell you what. Um, we're going to change things a little bit, and we're going to change things because Oliver said something today, or like many days, that he repeated enough that it finally stuck in. And that is that not all money is your money. So, for example, in a lot of these reviews, I've been going over moves. For example, I'd go over this move and say, okay, there's a tail bar right here, and because there's a tail bar, we should take this move and collect all this change. But the reality is, if that's not in my trading plan, that money is just not mine. Not all money is your money. So only focus on your money. So if I'm going over these trades, I'm really only going over the trades that would be mine. So I would take this trade, for example. I would take this trade. I would take this trade or this trade, for example. This is a trade that's in my trading plan. This isn't a trade that's in my trading plan. So I'm not going to cover that. It gives the wrong impression. It makes it seem like that's something I should be looking for, and therefore I'm looking for. When we were winning, and that was maybe a week ago, a week and a half ago, we were just primarily focused on power positions and moves off the 20. That's what we were really focused on. That's primarily what our trading playbook is about. Now we're trying to go through and do everything. And when we do everything, we just don't have the trading capital to really make those coverages of everything. And by the time the good moves happens, we don't have enough to really stand fold and actually make those moves. So that's something we're going to change, and you'll see it in this review and moving forward. And hopefully it'll make you a better trader, like it'll make me a better trader. So the first thing we're going to cover, like always, we're going to cover flow. Who had the best flow? Is it C or is it CVX? Neither of them had great coverages. So let's go to Intel and Merck. Nope, Merck didn't have anything. Did Intel have anything? I mean, it had something. Uber. I think Intel beat Uber. Let's say Walmart. Mm, I guess Walmart does give that instance of having a large red bar, a crash play where it crashes into um, the 20 and then it goes down. And then you look at Intel where you'd sell here, nothing to the left. I'd give it to Walmart. So Walmart had the greatest flow, and that's a crash play. So now let's go into our moves. So first we did Merck. That was our first trade. Merck, I showed you the crash play, what we thought was going to be the exact same thing except the opposite way. We had a green bar all the way up here, and it was off the 20. And the other day we had a similar move like that in a different stock that we don't cover, and that was a play because it was off the 20. So we had to take it. It was off the 20. It went completely against us, and one of the main reasons why it went completely against us is the whole market was red this morning. So keep in mind, if the whole market's red, you don't want to go against the flow of the river. You want to go with the river. So that was the main takeaway from this mistake here. And plus, once it lost about 50%, you probably could have cutted the trade right here. I held all the way until it went below or right at the stopping point. That was just me being a little hopeful, which you can't hope in trading. You gotta kind of play the probabilities. So that was my first mistake. Now, how would I play this moving forward, knowing what we know? We're looking for a flat state, when we know we can play the previous day close as a flat 200. Do we get that opportunity? I think that's an opportunity. We could stop right here, buy. Doesn't look like that's going to go up. Probably get out. Oh, shouldn't have got out. Ooh, that's rough. We sold into here. Now, um, we just saw that as a pretty serious buy. This was a position of power. We thought that this was the top of the hill. That's where we know we sell right here. We know we sell right here. The issue with this is it just was so close to the previous day's position of power. We've learned that in previous videos, that usually if it does do that near this, it's a fake out. And what does this do? It turns against us, fakes us out. We get out right here. Now, in this one's case, it does eventually turn over. And realistically, had we have done what the game plan says, the game plan says you sell here. This is an elephant bar. You set the stop right here, let it go down, and we don't get out early. We hold until we break that point. Had we held till we break that point, that eventually gets past that and gets to the 200 where we could sell. And it even goes even further to the previous day close. So I might have contradicted myself, but still, had we have played by the game plan or the trading plan that we have, sell, stop, hold it, get out. Looks like a whale to me. That's how we trade. We trade the top, and we trade, if this is the start, we trade this, and this. Well, let's do that again. We trade this and this. If it's the opposite way, we trade this and this. That's all we trade. Everything else is really just it's just not in our playbook. Other people trade other ways. This is how we trade. Do we have a move? Do we have a move? One could have said we had a move here off the flat 200. Color change. These are both flat. Moved up. That could be considered a move. This right here could be considered a move. That is a bull 180. Flat down. We could have traded this right here, set the stop, use the Egyptian cotton right here, Hold the main stop here. We have extra stopping power here. Sell, stop. Probably get out there. That'd be Merck. Let's go to our next stock, Uber. Uber, we could say Fab 4. I'm going to say 1, 2, position 2. Elephant bar. Set the stop. Sell into this. Ideally, you'd get it somewhere here. It pushed pretty far. If you could have got out, you got out there. Let's say you didn't. You hold. Let's see what it does. It almost breaks you out here, or let's say it did get you out here, but you got a re-entry right here. That's a color change. You're in a position of power. You sell that. What we did is we missed the first one. We missed this. We got in here, position of power. We sold more here. We rode this up because we had to stop here. Let it go down. Let it go down. And ideally, we did do this correctly, better than we're used to doing it. And then we just started P&L trading. And it got here, and we just took the profits. But had we not, we still would have been good. It rode all the way down. And that's really what we're looking for. That's how our losses, our small risk equals big rewards. That's what we're really looking for, at least in this trading system. That you rode that thing all day. Now you probably would have got out here and maybe even bought. But it doesn't really matter. It's the end of the day. Next trade's going to be Walmart. Walmart, ideally, you have the crashes into it, and then sell, or 1 push, 2 push, 3 push, get out. Take your profit from there. Ideally, you got in here. That's a large move. I sold here, bought here. My rationality, this was a big bar. That's, again, that is in the trading plan. I'm not going to say that's not in the trading plan. Big bars you sell. That's in our trading plan. The issue with that, though, is that, well, there's nothing wrong with it. We sold a big bar. We sold a big bar and it didn't have any follow through. Granted, I can understand why it didn't have any follow through, because look at that. But neither here nor there. Big bar, sell, expect follow through. We expected follow through. It just didn't happen. And let's say we would have held it to the top which we did. No, we didn't. We got out here. And then we had another big bar clearing. We got in here 2 times in here. And we got out. I'll take that. I'll take that loss all day. Nothing wrong with that loss. Now, this is a move we have to take, and we saw it and we didn't take it. You have a red bar clearing, elephant bar, relatively close to the 200. You got to take it. You got to take it. It leads to a position of power. So now you're in a power position. You ride that thing. This time, ideally, you would have gotten out, but had you not gotten out, probably would have got an even trade. And even trades aren't bad. This we sold here. We were playing off of the previous day close. We sold here. We're not playing those anymore unless it's for, they're not in our playbook, just not playing off them solely. But we sold off the previous day's close, and it went against us immediately, and we got out. Now, of course, it did work with this one, but neither here nor there. That's just not in our primary playbook anymore. But I did want to go over it just because I did take that trade. Now here's one. Flat state, elephant bar. Combine the two. Set the stop. What's it do? Makes a move. 1, 2. That looks like a whale. Take your profits. Looks like it went even further right here, because now you're playing the green bar takeout on the 20. Far away from the 20, it pulls back. You get another one, 75%. You get another one, no lows. You get another one. And really, you could have stayed in that the whole time. And that's the beauty of trading the plan. The next one we did was CVX. CVX. Really, you could, this is a 1, this is a 2. You could have a 2. No, that's not what it did. It was green. It was started here, it got green, and then it went down. So this is wrong color. You don't have anything here. 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 I would say you don't have anything here, but you could say look to the left. But keep in mind this right here. This one, it looks like we played this elephant bar. green, clearing, nothing to the left, and we got out right here. There's no reason to trade something if you're going to get out right there. And look what this does. As I remember this. You're supposed to set the stop here, but in this situation, under the 200, under the Egyptian cotton, under the position of power, right here. Add right here. You can't. I would say add again right here if you could. Look at this. Those are the trades we're looking to take and make. Now we did take this because this is right here. But it didn't work. And we took this one just because we wanted to combine this bar to this and this bar to this, and to say we had a bull 180. Say it was going to go down, but it didn't. It just stayed straight. Keep in mind the flat 200 or the 20, flat 20. And then eventually you get a little moment down, but it doesn't stay. And again, when it's going down, I mean, you could just play the color changes. Color change. Color change. Color change. That's in our wheelhouse. Color changes. Off power positions. 200s. Egyptian cotton. Those are the areas we want to stay in. Next, C. This right here, your Fab 4. 1, 2, 3. Not sure what you would do with that. Not sure what you would do with that. Not sure what you would do with that. This is off of a 200, so we would sell, set the stop. Maybe a color change there. Maybe a color change here, but really it's here. It's hidden color change. Look at that. How good of a trade that is. What we tried to do is we tried to do a bull 180. It worked. We got out here, but that's an insignificant trade from the one I just showed you. We tried to buy in here. Thought this was a market law 4, which it might have been. Catch the bottom of a move, but this is still moving down to like a 20. You did a color change right here. Look how good of a move that is. Even better. So trying to trade everything is not the best thing, especially when you have limited capital. What stock didn't we touch? We didn't touch Intel. Intel. And Intel, this is the stock I'm shocked we didn't. Well, we did Merck because Yesterday, Oliver had one of the stocks that was a solid color, and he played it. And I wanted to mimic that same play. But our go to situation, the ones that we've been good at, our best opening plays look like this: one, two, one or two position, nothing to the left, hit the sell, set the stop up, it goes down. That's what we're best at right now in the open. Now, when it popped in, color change, write it down. And you could have been looking at the 15 to know it was going to pop on this 200. That explains that. Goes down, uses the 200 again, goes back down. Can't really rely on the 15-minute, but it can be used as reference. So I hope that cut down on the time of the video, but long story short, we're getting back to the basics of using the position of power, the Egyptian cotton, the 20 and the 200, the color change, and everything else is probably, I can throw it away. Hope you have a good one. Can't wait till Friday. See ya.